You are watching Commerce Lecture Online, paper code 770723, October November year 2020. We are discussing Eniola's rent and rates account in this video, which is question 2 of this paper. This is the question. Eniola's financial year end is 31 July 2020. She provided following information about the rent and rates of her business. On August 1, 2019, she owed 2 months' rent totaling 900. That means at the beginning of the year, this amount is already an obligation on her for the rent. On the same date, rates of 260 were prepaid up to 30th September 2019. It shows that this amount for the rates is paid in advance, that is prepaid. So this will be shown as a debit balance and this will be shown as a credit balance at the same time in the rent and rates account of Eniola. During the year ended 31 July, the following payments were made by credit transfer. On August 1, 2019, she paid 7 months rent. On October 1, again 12 months rates are paid. In 2020 year March 1, she paid 6 months rent, that is 2700. You are required to prepare the rent and rates account for the year ended 31 July 2020, balance the account and bring down the balance on August 1, 2020. Let's see some details regarding her rent. Already 2 months rent owed on the year beginning, that is 900. If 2 months rent is 900, it shows the per month rent is 450. 12 months rent is paid from August 1 till 31 July, that is 5400, which was supposed to be paid, but the actual amount paid was for 13 months. How 13 months? On August 1, the rent for 7 months was paid, and on March 1, the rent for 6 months was paid. How we got this information? We got this information from here. 7 months paid on August 1, 6 months paid on March 1. During the year, 13 months rent is paid by Eniola, but actually a 14 months payment was required. It shows that 1 month rent is still due on Eniola, and that 1 month rent which is still unpaid will be amount of 450, which should be shown as the balance credit in her account. Now if we look at the details for the rates account, already paid till 30th September, that means 2 months rates are already paid in advance, they are prepaid. Still paid for 12 months on October 1, that is 1860. We got this information from the question. On October 1, 12 months rates are paid, which will continue for the next 12 months. So if we calculate per month rate, it is 155. If the rates are paid from October 1 till 31 July, that means only 10 months rates are required to be paid. But because the rates are paid for 12 months, it means 2 months amount is still prepaid, which should be shown as balance brought down on the year end. Let's have a look on the ledger account which is required in the question. Opening balances are already given in the question, 260 for the rates and 900 on the credit side for the rent. We had seen that 3 times payments are given to us. On August 5, 3150 was paid. It will come in the debit side. Because rent and rate is an expense account, it will be debited the account. The bank is again showing a payment of 1860 on October 1. On March 1, the payment of 2700 is shown. All these are paid. We know that 2 months rent rates are advanced, so it will come as a debit balance in the balance BD. The same balance BD will come as the balance CD in the credit side. Same will go for the rent. 1 month is still unpaid, it will come as the balance BD on the credit side. The same balance BD will be shown in the opposite side as balance CD. After writing balance CD, our ledger account will be complete. we will be able to calculate the amount of income statement for the actual rent and rates which is missing in the credit side. If we had completed the debit side, both ledger balances will equalize. After equalizing, we know the balance CD amount. We will subtract the balance CD and we will subtract this balance BD. We'll get that income statement transfer was the difference amount, that was 7210. Again, from this amount, we know that the 12 months rent amount is 5400. So whatever is the balance, subtracting 5400 from this amount will be the amount of rates for 12 months duration. So this is how the ledger account for rent and rates of Eniola is to be prepared, keeping in view the details which we had discussed here as described by the question. So this is about the ledger account. The remaining part in the question is identify the sections of statement of financial position at 31 July in which each of the balances on the rent and rates account would appear. We had seen that rent, 1 month rent is still unpaid. It has the credit balance, therefore it will be shown as a liability. We had noticed in the ledger that the rates are prepaid for 2 months, therefore this will be shown as a current asset and it will be shown in the balance sheet current asset portion. Next part, name one accounting principle Eniola apply when recording the rent and rates in her financial statement. So she is applying matching or prudence. How Eniola would apply the accounting principle named in part F1, that is how these will be applied. Matching shows the expenses of the year are matched with the revenue of the year, and prudence shows that the profit for the year is not overstated by understating the expenses of that year. So this is how these two principles are applied by Eniola in the business. Like, share, subscribe, Commerce Lecture Online.